Good morning. I'm Emily Beckett, Digital Marketing Specialist at Sprague.
And I'm Joel Williams, Director of Wholesale Fuels here at Sprague.
Welcome to Sprague's Refined Products Review, where we share what's moving the market, giving you insight into what we're seeing every day. So, Joel, how about that weather?
Well, it's been cold out there now. It's snowmaking weather for us skiers, so that's a good thing. It sounds like we're going to maybe a little bit warm up for Thanksgiving, but at this point, what we're hearing is all signs point to a pretty cold December. Now, again, these things are always in flux, but it sounds like the elements are in place for hopefully a good start to the season here.
So, we've heard a lot about crude oversupply in the last few updates with some downward pressure on prices, but the market continues up. Can you explain some of that?
Yeah, so oversupply really it's been dominating the headlines. OPEC has been announcing, kind of increased production, things like that. And floating inventories are starting to build in Asia, but here at home in the U.S., we're really just not seeing it yet. Crude inventories and pretty much all pads are at their 5-year lows, as well as distillate and gas inventories are also extremely on the low side. So, we can also take a look at kind of how the investors are looking at this. And right now, when you look at it, crude is backwardated into the next several months, backwardated flat before it really starts to go into contango mid next summer, which would kind of say that the investors also feel like there's a little bit of a crunch here in the short term, but certainly some fears for oversupply in the long term that could have some downward pressure on prices. We're also seeing that the distillate curve is extremely backwardated and the crack spreads are actually getting really, really large right now.
So, that's a lot of technical pieces. What does this all mean?
Backwardation is really just a fancy term for saying that it costs a lot of money to hold inventory, and the market is trying to give you an incentive to liquidate your inventory and punish you for holding inventory. And as such, you're really going to see suppliers getting pretty lean right now because there's really the amount that it costs to hold inventory is just too high to take a chance of holding a whole lot of inventory. And the crack spreads, on the other hand, that has to do with the difference between the price of oil and the price of diesel or heating oil. And that spread keeps getting wider, which means that there's a real incentive to refine more products right now. So what it's saying is that, even if we do have some oversupply of crude, there's a demand for distillates that's really outpacing sort of, or not outpacing, but really maximizing what our refineries can produce. And so, that will continue to present challenges in the marketplace.
And what does that mean for our customers?
So yeah, what it means for our customers is that we're going to be dealing with a fragile supply chain again this winter. People aren't going to be holding a ton of inventory, and it means you want to find a supplier that you really trust, someone who will deliver, and someone who will have inventory on hand. Someone like Sprague. The other thing we need to be ready for this winter, and particularly now, is the volatility we're seeing in the market. I mean, just in the last week, you can see, midday moves and people rescinding midday moves and the market being up and then being down in the morning or being down and then being up in the afternoon. Kind of this roller coaster, a couple pennies each way. And for our customers, what it really means is that they need to take a look and take advantage of the tools that we provide out there. I'll tell you right now, from looking, sitting in the desk and on the real-time platform, as the customers that are doing the best and making the most money off of this volatility are the ones that are using the tools available to them. They're the ones putting bids in, so when the market takes that little dip, they're locking that price in, putting alerts in, so at least they know when those dips come and they can make a decision. So my advice to everyone would be to freshen up on the tools that we have out there. And if you have any questions, ask your rep and we'll get a training session set up for you and make sure you're, positioned for success within this volatility.
Any last updates you have on us for things you're watching?
Yeah, so there's a few other things we're watching out there. I mean, obviously the government shutdown has been what's monopolizing the news cycle lately, and it's taking a lot of our government's time. It does sound like we're making progress towards ending it right now, so that's good news. So the real question becomes, where do we focus next? And two of the news stories that I'm following, one in particular certainly is the Russian sanctions. We heard that the government announced some additional sanctions on Russia, and we immediately saw prices go up. But what we're really seeing out in the market right now is that the sanctions aren't really having the impact that they thought they would. These sanctions around stopping Russian oil is just creating creative ways for the Russians to send their oil elsewhere to get it to the market. And so you're kind of in this whack-a-mole approach. And so the real question that I'm looking at right now is, are we going to see more teeth put on these sanctions? Basically, is the government going to find a way to sort of end this game of running these end arounds around the sanctions and really get that Russian crude out of the market? And then the other thing that I'm waiting to hear on, really, quite honestly, is the Canadian tariffs. I mean, we recently saw that, President Trump announced and he was ending all trade negotiations with Canada, and that there was an incremental 10% in tariffs coming to for Canada. He announced that a few weeks ago. Since then, there has been no news on exactly when those tariffs will be implemented and exactly on what products they'll be implemented. And so for us, it really is about paying attention. Will it impact the USMCA, and will it impact petroleum products? Quite honestly, coming into the U.S., 10%. That's a lot of money on today's prices. You're talking adding 20, 30 cents to a product. So, we'll be very eager to see what happens there. And then the other thing resulting from this is that obviously the end of these negotiations is one thing, but the big impact for us is the USMCA. It comes up next summer, and the temperature has been raised, and we're not getting along as well as we have in terms of trade in the past. And so we'll see how that bleeds its way into these negotiations. And again, only time will tell. A lot of things can happen here, but it's certainly something that I'll be paying attention to as we turn the calendar, into the new year coming up.
Well, that's certainly a lot to digest. Thanks, Joel, for joining us this week.
Thank you, Emily.
Before we go, if you haven't seen it yet, be sure to check out our latest monthly feature, an overview with Sprague's customer care and customer setup teams on our YouTube channel now.
Well, that's all we got for you today. So thanks for joining us. We'll be back next Wednesday with another Refined Products Review. Refine your insight.
Fuel your success.
Did you know that dogs can't run the MRI machines?
I did not know that.
But cats can.
That was a good one. You might have beat Chris's jokes last week.